Getting a 15-year mortgage instead of a 30 is a $1 million mistake. There are a lot of financial talking heads out there, Dave Ramsey most notably, who suggest never considering a 30-year mortgage and only buying a home if you can put 20% down and afford the payments on a 15-year mortgage. This, however, in the long run will cost you a fortune. So let's do a little bit of investment math to understand why. So let's say you are buying a home and you need to get a $500,000 loan to do so. The average mortgage rate for a 30-year loan in the United States is 6.72%, and the average mortgage rate for a 15-year loan is 5.99%. Your principal and interest payment on the 30-year loan is going to be $3,233. Your principal and interest payment on the 15-year loan is going to be $4,217. So that accounts for a difference of $984 per month extra that you're paying on that 15-year loan. Over the life of these two loans, the total amount paid in principal and interest is going to be $1,163,889 on the 30-year loan, and a mere $758,985 on the 15-year loan, which seems like a huge advantage for the 15. The difference that you're seeing in those payments comes out to $984, as mentioned, in your monthly payment, and $404,904 saved by getting the 15-year loan. But this isn't the whole picture because it does not account for the opportunity cost that you could have done with that extra $984. So let's say you pay those $3,233 payments on a 30-year mortgage, but you have the fiscal responsibility to take that extra $984 and invest it every month. Let's say you put that in the Vanguard 500 index fund, which is a long-term, stable, passive investment that over the last 10 years has returned on average 13.11% annually. So your $984 monthly investment at the end of 30 years is $3,783,873. That is a gigantic chunk of change. But just so we have an apples-to-apples comparison, let's say at the end of your 15-year mortgage, you kept paying that entire $4,217 into that same index fund for 15 years. Your total there would be $2,207,401. Now let's add in the $404 plus change that you saved in interest compared to the 30-year mortgage. And still, you come out having only been negative $1,171,568. Getting that 15-year mortgage, when you consider what you could have done with it, is going to cost you more than $1.1 million. The truth is that the 30-year fixed-rate mortgage is really only available in this country and is one of the most powerful financial instruments that there is. And there is absolutely no reason to pay it off any earlier.